What's going on YouTube? Welcome back to my channel, Living Bullish with Colton. In today's video, we are going to be touching on liquidity, right? So perfect. Hopefully everybody has been caught up in the confirmation checklist series, right? We're now on video number 4. Video 1 was market structure, understanding Wyckoff schematics. Video 2 was trend analysis. Video 3 and 3.5 was imbalance work. Now video number 4, we're going to be touching on this word liquidity. Right now, it's crazy because liquidity wasn't a word that I ever studied my first year and a half when I was trading. It was never really taught to me. I never heard about it, so I didn't really know what to think about it, and I didn't understand that I was actually being part of the liquidity that they make in the market. So let's think about it like this, right? One of my favorite quotes to live by is observe the masses, do the opposite. Right now, we've already done that when it comes to stepping into the world of investing. But once we step into that 1%, they still are going to come out here and attack the masses. So what we got to do is understand what the masses learn. And we got to go ahead and do the opposite, right? And what the masses learn is to be parts of those big pools of liquidity or money that you may hear me talk about it later on in this video. And for this video, right, we've already been searching liquidity out for this entire channel, right? And no matter who you follow along with as a mentor, you know, for a smart money concepts purpose, hopefully they've taught you guys how to seek out liquidity. But this is just one more confirmation until we get to the institutional candle that's really going to bring it all together at the end of the day. So understand this, right? No matter, you're always taking a position in the market. If you're buying the market and you pull out of your position, you're selling that back to somebody else. And when you're selling the market and you get out of that position, you're buying the market back to somebody else. So the market's always forming new areas of liquidity. We just want to identify where the biggest areas are and where the banks want to play inside of those certain areas. So again, they're in here to attack the majority, to help most people go ahead and lose that money that they invested. But we want to see where they're getting most individuals in. And we're going to go ahead and take a little bit of a different approach to it, right? We're taught 20 to 50 pip stop losses. A lot of times, their liquidity runs do 20 to 50 pip stop losses, right? A lot of the times, they want to teach us to go ahead and learn the markets on these magical shapes, these magical lines. But again, they're just there to go ahead and print the picture for us to go ahead and be part of that bigger area of liquidity. So let me go ahead and share my screen, and we're going to go over a little bit of retail patterns that that you guys may come across. And these are your liquidity patterns at the end of the day, right? A double top is an area of money of sellers at the top, right? A head and shoulders, there's pools of money of sellers at the top of this, whether it's rising and falling wedges, double bottoms, triple bottoms. You guys got to understand that these blue lines are literally retail liquidity. This is where the big ballers want to go ahead and make us get our orders in. So then we go ahead and lose, even though we know the directional bias, right? They're going to go ahead and take us out right beforehand. So let's go ahead and dive into some charts, right? So right here, we got GBP USD. You see the confirmation checklist in the top right. And again, once we get to video 5 on institutional candles, it's going to bring this all together. But liquidity, guys, we're looking for the money. We want to know where the money's at. We know that the banks are going to attack the money. We understand the term follow the money. We got to do the same thing here inside of the markets. So again, and it may seem repetitive, but you guys want to look for the schematic, right? Anytime they're creating those equal lows, those equal highs, that is just money being made, right? Now, let me go ahead and draw out a little blue box, right? This is a pool of money, right? This is a pool of sellers, a pool of double tops, right? We see where most of the money is at. And I'm not here to talk about, talk down on the people that are making money on these sell positions. They can make money. That's great. But I want to go ahead and get into the markets in areas of accumulation and distribution, not consolidation, right? So let the market move, getting in all those sellers, right? Now, what's happening? So I'm going to go ahead and create this blue line, right? This is going to be where all the sellers are getting in, right? Where most of the time are the seller stop losses up above a previous wick or some kind of previous market structure, right? Whether it's the actual high or whether it's like a wick high. So what are they going to do? They're going to put your stop losses up here, and they're going to be targeting, hopefully, whatever other lows that they have inside of the market. So the psychology of this is the banks want to go ahead and create that new pool of money to the downside, right? Where most people were going to take profits, but they didn't. And before they go ahead and break that, what do? They show us that institutional candle, right? Now that institutional candle, a lot of times, right? Sellers here, profit, 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 profit. What are they doing? They're bringing that stop loss and moving it into a stop profit. So as the banks go ahead and pull this market back up, the sellers, all sellers are getting out of the market, right? They're actually, when they close out, that puts more buying pressure on top of the bank's $2 million lot buy. Now, as they go ahead and break above the old selling area, now what is it going to trigger? Buy stops that sit up here. There's stop losses, there's buy stops. Now everybody's thinking that the market's going to go bullish. Now they have a bunch of bullish orders inside the market. So they've confused the sellers. Now everybody thinks it's buying. And then traditionally, after they go ahead and move above, you know, typically this is on a daily chart, but let's say 20 to 50 pips here, they're going to go ahead and move that market right back down and go ahead and take that low side liquidity as well. And once that liquidity is taken, you can go ahead and say, hey, liquidity has been taken. But again, we've already been doing this on all of our webinars, guys. And this is going to be a shorter video because I'm not going to do a lot of examples for you. But you guys have to understand that we're just looking for the money, that they want to seek out big areas of money before they make a move, right? Day of equal highs, couple days of equal highs. What do they do before they move the market down? They drive it up above, right? A week's worth of equal highs, they drive the market up just to bring it down. 3 days worth of equals highs, they drive the market up just to bring it back down. What happens before they go ahead and move this market up here? They drive below this wick and this wick of liquidity. And same thing goes on here. Understanding liquidity, right? You can use this on whatever time frame. You got to understand whether you trade on the daily, whether you trade on the minute, you just got to understand that time frame's range, right? If you're trading on a minute chart, you're going to be using 2 to 3 pip stop losses for 10 pip games. If you're trading on a 4-hour chart, right, you're going to be using those 30 to 40 pip stop losses, maybe 20 pip, and you'll be looking for those 50 plus, you know, pip gains. So understanding the purpose of the time frame that you trade on and having the proper risk management behind it is how you guys are going to really have success in this, you know, past all of the confirmations that we're going over in this series, right? So price action from this week, what happens? Price opens up, right? They form an area of low side liquidity. It can even be made as a trend line. I'm going to walk you guys through price. What do they do before they move up? They trade below the liquidity, right? Taking out the buyers, and they go ahead and make higher prices. Now, bigger time frame, we're overall bullish on this pair, right? So takes liquidity to start out, runs up, consolidates, does the same thing again here, right? This is a pool of money. What do they do before they move up? They take the money with a simple swoop, right? They take the liquidity. We can go ahead and use, again, whatever icon. They move it back up to the upside. We find an area of resistance, right? But also, now the way I think about it, we just formed another new area of liquidity. And at some point, the market's going to want to come target this. So now, you know, whether you're maybe taking sell positions, you know, off of this break, because again, this is even, and again, this is what I'm telling you guys, like there's liquidity anywhere that you look. It just depends on what the higher time frame bias is and how you're going to trade it. If you're looking for this sell off of this, maybe low time frame imbalance, who knows? Either way, market moves down, right? And we're bullish on this pair. So market moves down in the middle of the week. What happens? Same exact thing. We get a pool of equal lows. We wait. We see the evidence that the market wants to come trade at higher prices because it broke this structure with the wicks. So now as price breaks back down, you see them sweep not only this pool of money, right? Where again, this is where all the double bottom buyers are, right? They see that evidence, they get excited, they start over leveraging, they're putting in extra orders. If their stops aren't already moved from this wick, you know, they're about to be moved pretty quickly. Market trades back down below the lows. hitting their stop profits, right? Running below this low. And then what do? They continue the market back up. And what are they going to target? The weekly high that was made here. And as you see, they did that on Friday, right? Based on all of this. So let's go ahead and price, break price action down. From here, how would you have, taken a trade on this? You let it accumulate its orders, drive below it, see that evidence of trading back above. And as you see here, this would have been a nice, couple retracement entries, right? You're entering, maybe within the open to 50% of this down candle, right? It gives you it again right here, right? So you could take any of these up. Bullish mentality, understanding we got high side liquidity with imbalance, right? And we got it. We just had like everything we needed in the picture right here, right? So this was really nice. I guess we'll get into one more example. If you haven't already, go ahead and smash that like button, right? The algorithm loves likes on video. So go ahead and smash it. Go ahead and share this channel with somebody if you get some value from it. And I appreciate you guys just trying to grow this. Not trying, that's truly resisting yourself, but really looking forward to what's to come here on YouTube, right? So let's look at one more example, right? So this was actually a clean setup, but it didn't play out at the right time. It hit at like 1 p.m. last week, right? You guys can see we had an up candle that overall what took this pool of liquidity, right? All these sellers that would have been in off of this one. We drive a little bit higher. Market traded below this entire trend line of liquidity. I'm going to keep pointing it out for you guys, right? Overall, on a bigger time frame, we formed this bigger area of equal lows, right? There's buyers. And again, like I'm not going against people making money on this buy. You know what I mean? Like we probably did on smaller time frames. But understanding we got a bigger imbalance down here in this liquidity, that's exactly what you want to see, right? So, again, like you could break this down to whatever, like we'll go down to the minute real quick to end one off, right? You can even see it here. You have all this, I got these highs. What happens when we go revisit those highs? People, and I'm telling you, like, it's hard to rethink this way again after you understand smart money, but you're just selling this. Like people are selling this even off this institutional, you know what I mean? Like they're doing it. So what does the market do? Drives back above. As you see, it's not always one single candle. Whatever series of candles runs the high. Market trades back down into that trend line of money. We come retrace up. Now this isn't the cleanest because it hung out right here, but overall it played off that up candle and you saw the market, trade down. What happens here, right? And the same thing I'm showing you guys here on a small time frame happens on all your bigger time frames. Look, lows, drives low, trades above, come retraces into the imbalance, point of interest candle, stop up under the lows. And what are we going to go ahead and target? Imbalance in equal highs, right? So if you're bullish on the pair on every other time frame, you haven't made new lows, right? That's all you got to do. That's all you got to do. But seriously, I appreciate y'all. Hope this helped out. Maybe a couple questions that you had when it comes to liquidity. Again, it's funny how it all comes together because now when I look for a setup, I look for liquidity, I look for imbalance, I look for that point of interest candle, and then what other confirmations that we have. Next video, right? Next videos, we're going over time and price, some Fibonacci stuff, just some extra confirmations that you guys could use to really enhance your trading. Again, I appreciate y'all so much. I hope this helps for this week. There's a lot coming. I don't know if I'm gonna have a Telegram here for this video dropping tomorrow, which would be Monday, but coming soon, guys. So I can broadcast a channel. I could drop a Zoom. We could chop it up, go over any questions, but I appreciate y'all. Hit that like button, share the channel. Let's continue to live bullish. And I love y'all. Let's get it this week.